One on the line. Thank you very much for joining us today. We have a large audience from around the world. If you look at when I look at the people who've logged in, I'm seeing people from, of course, Hong Kong and the Greater Bay Area, but also across China, across Europe, and across ASEAN. So we've got a big audience. This is a webinar about the Hong Kong Green Bond Market Briefing that we're launching today, which is a look at the 2019 market, but we're also having a discussion about developments this year and in the Greater Bay Area. Joining us today are Ivy Lau, who's our Hong Kong and Greater Bay Area Manager for Climate Bonds based in Hong Kong, Kenneth, who's the Markets Development Manager or Head of Market Development for the Hong Kong Monetary Authority, McNelis, who's the Managing Director, Global Co-Head of Debt Capital Markets for HSBC. He's got a much bigger role than just Hong Kong and the Greater Bay Area. So it's great that you can join us today, Sean. And then, of course, the indefatigable Tracy Wong, who's the Deputy Secretary General of the Hong Kong Green Finance Association and who is a force of nature. Thank you, Tracy, for being able to join us today. The discussion will look initially at the report briefing and the sort of things we've covered, and then we will turn to panelists' comments and a discussion about the future. This is one of a series of webinars that the Climate Bonds Initiative is hosting around the world in context of China, in ASEAN, in Latin America and Europe. All of those webinars can be seen afterwards, or you can register for future ones. The website, climatebonds.net/webinars. So please feel free to do it. This particular webinar will also be available as a podcast on platforms like Spotify and Apple and Google. So there are many ways that you can tell your friends to tune in and find out what was being said today, should you think it's of interest. We're in unusual times. We're in the midst of a COVID crisis affecting different parts of the world at different periods. It's driving home a few things. You know, we've had a very strong appreciation on the part of investors and on governments like the Hong Kong government about the challenge of climate change and addressing environmental issues, just building over the years. That's the background to the green bond market. We now know that the current crisis was related to pathogens jumping between species in degraded environments. Many scientists are now saying this is in fact a symptom of climate change, because as environments are degraded and become weaker as a result of the pollution we're creating, the destruction of habitat and climate change, we're going to see a lot more pathogens jumping between species. In fact, the International Panel of Climate Change and the World Health Organization have been predicting for many years now, 20 years, that we're going to see multiple pandemics during the 21st century linked to the changes to the environment that we as humans have created. So it's useful to see that in that perspective. We're having we're getting a visceral understanding of what we're going to need to do to manage these crises. Clearly, greater depth of resources and resilience and redundancy in our health system now needs to be the new norm. We learned a bit about that with the SARS epidemic a few years ago in East Asia. Europe has been behind East Asia in understanding these things, which explains the slowness of addressing the crisis in Europe and the US. But this is, we're learning the hard way. We're also going to now to look at our social protection measures. How do we support people, particularly the poor who are outside the formal economy in these times of crisis? They're going to need to get food, money to buy food. They're going to need to get access to some form of support during these lockdown periods. Otherwise, we're going to see people suffering significantly, as frankly we are in some of the countries that have been poor on social protection measures going forward. I won't name them, you can guess. We do need to understand that to minimize the risk of catastrophic crises in the future, as has been predicted by the IPCC as high risk, we need to start inoculating against that by getting our emissions down as we come out of this crisis. That means a green recovery. We've seen in China the announcement of effectively a green infrastructure plan, which promotes the kinds of investments that are consistent with the 5-year plan's green economy and green finance priorities. We're seeing in Europe a very strong and committed debate about making sure that the stimulus is a green stimulus, including the announcement last week at the European Council of a €1 trillion green stimulus recovery fund to restart the economies. So the whole landscape now has to be seen differently to what it was in the past, now that we understand what crisis is going to look like on a regular basis in the 21st century. And we need to hasten our efforts to green our economies going forward. Of course, the green bonds market and its cousins, the social bonds and sustainability bond market, are part of matching investor concerns around these issues with the kinds of investments and assets that are part of the solution. It's worked a treat. In China, now the world's second largest green bond market, thanks to regulatory action, we now see a vast market. 25% or roughly of all green bonds are issued in China. And the renminbi is one of the three dominant currencies in this area, along with the USD and the EUR. Of course, Europe remains the leader as a jurisdiction across many countries, and we see continuing measures by the European Commission to grow this market. I myself have been involved in developing an EU taxonomy, a bit like the Chinese Green Projects Catalogue, and other measures to grow that market and support it. And then, of course, Hong Kong Monetary Authority has also been a leader in government action to try and support and grow this market. We'll hear a little bit later from Kenneth, who's been one of the key people behind that thinking in HKMA. In the meantime, the mechanical issue. You've got on your screen, if you're a viewer of this podcast, the Q&A, question and answer button. Please do feel free to ask questions in text on that button. We will attempt to answer as many as we can during the course of the webinar, and we'll attempt to follow up the rest later by email. But that's your opportunity to make sure you ask questions. Try and avoid using the chat button if you can, because that's mainly for speaker interaction. Thank you everyone for joining us. Ivy, can I get you started, please, on giving us a bit of an overview and highlights of the Hong Kong Green Bond Market briefing?
Yes, sure. Thanks, Sean. Hello, everyone. In the next 10 minutes, I'm going to share with you all the key findings of our Hong Kong Green Bond Market Briefing 2019. So the Hong Kong Green Bond Market in 2019 was further developed with the support of the HKSAR government and also a number of policies measures rolled out by the city's financial regulators. Total issuance by Hong Kong domicile entities was down slightly to $2.6 billion, a decrease of 5% or $140 million versus 2018. Cumulative issuance has reached $7.1 billion overall. That said, we have seen several highlights that underpin the development of the Hong Kong green bond market. For example, there were increasing diversification of issuer types and project categories funded by the green bonds in Hong Kong. Secondly, issuance from real estate developers remained one of the key drivers for the domestic green bond market. Newcomer Tyson tapped the market with 4 green bonds in 2019. We also noticed that a growing number of real estate developers chose green bonds chose green loans to finance projects in 2019, including the Wong Holdings, Hannon Properties, and Capital Corp Limited. In terms of issuer type, the mix changed significantly in 2019. Overall, there were 4 different issuer types, making 2019 the year with the most diversity so far. The different issuer types include non-financial corporates, financial corporates, sovereign, and also loan. So what are the major categories funded by the green bonds in 2019? We actually seen a more diverse use of proceeds in 2019 with 8 categories funded. The share of buildings grew to almost 2/3 of the overall volume, so the highest percentage so far. In fact, the bulk of green deals from 2019 were intended to finance buildings to some degree. The 3 largest allocation by volume came from the buildings category, such as Link REIT, Capital Corp Limited, and also the Wong Holdings. The next largest category was waste, which is 8%, followed by industry, transport, water, and land use, all at 6%. Energy makes up 5% of the use of proceeds. The range of use of proceeds diversified because it was driven by the Hong Kong SAR government's Green Bond Program, whose Green Bond framework listed all categories except ICT as eligible. Besides, diversity of green bond use of proceeds was also benefit from one of the real estate companies. Hysan, we saw that it didn't limit the proceeds allocation to green buildings, but also allocate the green bond proceeds to waste, adaptation, and also energy efficiency. In the 2019 Hong Kong Green Bond Market briefing, we also did a post-issuance disclosure analysis for the first time on the green bonds in Hong Kong. Post-issuance reporting allows investors to track the allocation of green bond proceeds during the life of assets or projects financed. It provides transparency and enhances the credibility of green bonds, contributing to the market integrity. So given the most guidelines encourage annual reporting, we allow a time of 1 year to lapse with the grace period for reporting to be made public. We analyze green bonds issued up to the year end of 2018 and excluded bonds that had matured before the cutoff date. So of the $4.5 billion worth of green bonds from 12 Hong Kong issuers since 2016, 81% of them carry disclosure on the green bond proceeds allocation at post-issuance stage.
Ivy, can I just ask you, this is, I'm looking at the graph on the page, and this is a buildings market, right? Hong Kong is all about green buildings. This is very different to most markets, although probably consistent with the asset base of Hong Kong. How does that compare with the Greater Bay Area market? Is it similar? Do you or Tracy have any comments about that? Just if I can be curious at this particular point. Tracy, do we see the similar profile in the Greater Bay Area? Is it still dominated by buildings, or is it a very different profile from what you can see?
So from the green building market, I would say that Hong Kong, the coverage is a little bit more advanced. So almost every other new build, roughly about 60%, we are seeing that they apply for green building certification. So I think that is a little bit more ahead compared to the GBA area. Okay,
I mean, it's the only market in the world where buildings make up such a large proportion of it, of a sector. So it's very interesting. But we've only just, Ivy, we've only just tapped the market, haven't we? We've only got a teensy part of the buildings in Hong Kong that could qualify as part of this so far. So there's a lot of growth prospects in this, I think. Am I right in thinking that, Ivy?
Exactly.
Sorry, over to you. I just was fascinated by this. Please go ahead.
Absolutely. I just want to call out that according to the IFC, 16 trillion additional investments is required by 2030 in the region, in the green building industry. So we are like a tiny little bit that hack into the corner.
Wow. Ivy, sorry, go ahead.
We are going to look at the Hong Kong HKMA's figures on the green bond market. So just a little bit of background information. The HKMA considers a green bond as issued in Hong Kong if a majority of its arranging activities takes place in Hong Kong. So, but although climate bonds and HKMA use different approaches to determine the market size, I want to emphasize that all the green bonds captured by the HKMA figure are aligned to the climate bonds green definition. So in 2019, $10 billion of green bonds was arranged and issued in Hong Kong. This compares to $11 billion in 2018. The cumulative green bond issuance amounted to $26 billion by the end of 2019. More than half of the issuers in 2019 being the first time issuers in Hong Kong. Thanks to the Hong Kong's robust green bond platform, supportive government policies, and also strong expertise and investor base attracted many new issuers to the market. Mainland Chinese entities continue to drive the market with an issuance size totaling $8 billion in 2019, or 79% of the market, representing a year-on-year growth of 10%. Hong Kong has long been the preferred offshore fundraising center for mainland enterprises. Given their familiarity with the infrastructure, policies, and bank expertise in Hong Kong, as well as the growing community of green consulting and accreditation services, most mainland issuers regard Hong Kong as their first destination to raise offshore funds. Financial institutions contributed almost half of the green bond issuance in Hong Kong. If we look at the tenor, short to medium term tenors are most popular. The majority, 98% of issuance by volume in 2019 were in the short or medium term space. Let me take you all to look at the Greater Bay green bonds market in 2019. So in addition to the Hong Kong green deals, CDI, we also keep track on the green bond market in the Greater Bay Area. As you can see in the bar chart that the total volume of green bonds from Greater Bay Area grew significantly last year, reaching $6.4 billion in 2019, a 54% increase year on year, of which there were 45% worth of green bonds issued by Guangdong-based issuers. And I want to bring your attention to also one of the green bonds issued in Macau. There was a $963 million green bond placed by Bank of China through its Macau branch, and it is the inaugural issuance in Macau so far. I would like Tracy to explain more about the Green and Climate Initiative in the Greater Bay Area in later of this section. And right now, I'll hand over to you, Sean.
Thanks, Ivy. So folks, you can see some key statistics here. This report is available now. Let's turn to our panel and get some comments. Perhaps, Kenneth, I can start with you. I want to start with you because there's an announcement that was made very, very recently. I'm keen for you to tell us about.
Yeah. I presume you're referring to the announcement that we made yesterday about Correct. The formation of the cross-agency green and sustainable finance steering group. Yeah, I mean, it's quite a big event for the Hong Kong green and sustainable finance industry. And it's pretty unprecedented because I think, well, as far as I can recall, this is the first time that all the financial regulators in Hong Kong, plus the stock exchange, plus the two relevant government bureau, the Financial Services and Treasury Bureau and the Environment Bureau, get together for a common cause. So yesterday we had the first meeting, basically the principals, the CEO or chairman of all these agencies came to the HKMA office and kind of discussed the way forward. Right now we are still at the kind of initiation stage. There isn't that much that we can talk about, but we've set up two work streams. One is to focus on the regulatory and policy issues, basically the taxonomy, the disclosure, risk management, and the like. And the second work stream would focus on market development, thinking about how to build capacity in Hong Kong, to promote the Hong Kong platform, to share knowledge with the industry, as well as to build Hong Kong's international profile. So, I mean, these are long-term work. We're hoping to come back to start the work as soon as possible and then come back to the steering group towards the end of the year to report our suggestions. So, I mean, I'm pretty sure that we'll be consulting many of you throughout the year, you know, expert and with the relevant experience, hoping to build the Hong Kong market together.
This is a very exciting development, Kenneth, in terms of greater coordination between all the regulators and the stock exchange and so on. So congratulations on bringing these together. And I know you as the head of market development at HKMA are central to all these developments. So congratulations to you and your work. Are there any thoughts about further initiatives we can expect there? I appreciate you may not want to drop us any tidbits, but I'll also ask Sean and Tracy any ideas for the regulators to consider in looking at how to grow the market. But what's your reflections on what needs to be done to develop this market for Hong Kong and for the Greater Bay Area?
So I think from my side, when I look at it, you know, in terms of what, you know, Hong Kong can do in terms of scaling up and growing the market, I think Clearly, Hong Kong is one of the top 3 financial centers globally, and we've got a very large capital markets activity here, which provides a natural platform for green finance, and we've already seen the benefits of that. You've also around that got the infrastructure of highly developed professional services markets, and with Hong Kong an ideal bridge for bringing international best practice to the region and to obviously mainland China. For green finance in particular, I think Hong Kong has benefited in the past few years from the very strong government support that we just heard about from Kenneth. But basically, such as the Hong Kong government's green bond grant scheme, this initiative yesterday around a cross-agency cooperation amongst the HKMA, the Insurance Authority, the SFC, and all the other governmental bodies. This is basically unprecedented and fantastic to see that level of cooperation. That really helps to develop and get everybody pulling in the right direction. I think also, what Hong Kong has done very well and needs to continue to do is to develop, the technical expertise. So the green, structuring expertise, having the experienced professionals here. Clearly, having, I'm in the area of debt capital markets, having, green bond specialists and green loan specialists sitting in Hong Kong is very, very helpful from both the issuer and investor side in terms of developing the market here. I think alongside that, the external review that's very much part of the green bond framework. Clearly, the HKGFA as a local expert, has developed the certification scheme, and that's been, a fantastic success with over 50, certifications so far. But alongside that, for second opinions, you've got, 2, global international organizations already physically resident here in Hong Kong with Sustainalytics and Visio Eris. And basically, that obviously helps again to develop the market. So the more we see of that and the more coordination that we've just heard about from Kenneth, then basically that obviously helps to create the right infrastructure and the right environment for the business to prosper. I think yesterday's announcement was quite interesting in that, we can't think of Hong Kong alone, and, we all noted the references to the Greater Bay Area, because I think, going back to Sean, some of the points you're making around, real estate being such a big part of the issuance we've seen so far in Hong Kong, clearly that southern part of China and the Greater Bay Area, real estate companies are a very big part of the bond issuance that we see from southern China into the international markets. So to focus on that part of mainland China alongside Hong Kong is clearly, one of Hong Kong's big opportunities and challenges as we look forward as well. So I think getting the, setup and the infrastructure right is a huge part of that future success. And the final point is, of course, the HKSAR itself being at the forefront as an issuer. So having done the bond last year in 2019, $1 billion US, that clearly sets a very clear precedent for the market and for other, corporate and financial institution issuers to follow. And clearly that was one of the reasons why the Hong Kong SAR did that transaction. Obviously, we may see further future issuances and
You're hoping, Sean, is that right?
I'm hoping, because I think that's kind of the government type of issuance that we've seen from ROI, ROK, and the Hong Kong SAR. Clearly, when I look at the rest of the region and with my global hat on as well, it really creates the right environment in which others, can look to follow when they see the benefit of that from the government's issuance perspective. So I think all of that together, I think these are the right steps for Hong Kong to take. I think if anything, we can only be full of praise for what Hong Kong has done, and yesterday is obviously setting a great example even for other jurisdictions to follow in terms of getting the right infrastructure in place and getting everybody working together, which has not obviously happened globally.
So HSBC is happy, Kenneth. That's step one. Let's see what the Green Finance Association is saying. Tracy.
Thank you. So I agree with Sean's. So I would just to add that, for the last 12 months across our Hong Kong regulators, they have done a lot of groundwork already. So the Hong Kong MA has set out the 3 key measures. The HKEX already announced the step up of the ESG reporting for all listed companies in Hong Kong this year. And the SFC has done the asset manager survey. So the establishment of the cross-agency steering committee yesterday showed us that, you know, across the regulators in Hong Kong, they're now stepping up the game. And I see that as a moving into the action mode, in execution mode in the upcoming 12 months.
Okay, I mean, we do have work to do. Of course, the market's been dead so far this year. Of course, there are some rather major contextual reasons for that. I appreciate that. But we've seen a couple of things. Well, I think we've seen a green loan from HSBC, haven't we, Sean? Can you tell us about that?
Sure. Like, I think when we look at kind of, you know, Sean, you mentioned the recent developments. I think what we're existing in is like basically, you know, unprecedented. So basically, we've seen a crisis around COVID-19, which is, you know, unprecedented in any of our lifetimes. And yes, we have seen green bond issuance, you know, decreasing during that time. But I think we're looking at, you know, green bonds for year to date down only maybe 9% on previous years. And you're right, you know, loan products are replacing that during that time. But basically, when we think about, you know, COVID-19 and what it means for the, you know, sustainability in general going forward, well, there are a couple of aspects to that, I would say. The first is short term. We're seeing the turbulence that's caused in the bond markets, but more importantly, the governments and corporates' need for liquidity. We're seeing the prevalence of COVID-19 alleviation bond issuance. So this is very much something that's, you know, we've already seen over 40 billion so far in 2020. We think that's probably going to continue, as obviously, particularly from sovereign, SSA and bank issuers, as they look to help the real economy and the corporate sector. So they'll raise funding in, you know, social bond formats, basically. So that's more of a short-term development as part of the crisis. I think alongside that, what's the medium-term kind of aspect will be, you know, future green bond issuance. So we think, and we see that as basically having 2 components. Number one, those corporates that will get support, particularly from governments during this crisis, we expect that governments may encourage them or even require them to have stronger sustainability targets going forward. And basically, if they are required to do that, then of course they'll be looking at more green bond issuance going forward. So basically, we think that could be very much a driver. And clearly, in the next you know, year or two, as we've seen with the Republic of Indonesia and a number of SSA issuers, super sovereign issuers globally doing COVID-19 bonds. Obviously, as we see a lot of, you know, government issuance and MDB, multilateral development bank issuances in the next 2 years, a lot of that can be in green bond format as well, as governments and SSA policy type issuance reflects the sustainable angle going forward and uses the crisis, we're in a very unfortunate crisis clearly, but uses that to actually implement and change policy and develop the green bond market going forward. So that's kind of how we see this very, you know, unfortunate, what's happening with COVID-19 in the pandemic, how we see basically that it's more, short-term negative for green bond issuance because it's not the immediate priority, but basically medium-term we would expect to see actually not a deceleration, but an acceleration of that issuance. And to your point on loan issuance, so yes, as we always see in times of stress when the bond markets are stressed, then the loan product is something that works much better for our corporate issuers. So we and other banks have developed a loan product that basically can be in green bond format. So one of my colleagues, Liu Yinggang, has worked very carefully in crafting this and being able to extend green loans to our corporate clients in a format as a replacement for bonds. For those of you not that familiar with maybe how the bond market operates, particularly for the real estate kind of developers and others, they tend to switch quite fluidly between bonds and loans, depending on cost and need. And so in 2018, when the bond market was dislocated, we saw much heavier loan issuance, loan funding, whereas in 2019, very strong bond markets, we saw a lot of strong high yield bond issuance from Hong Kong and southern parts of China. So far this year, we've seen very little bond issuance from those high yield corporates in Hong Kong and southern China, and much more of a focus on the loan market. And of course, so we as HSBC were able to structure loan facilities such that they can be in green bond format equally to a bond. And we've actually even assisted some corporates to set up programs whereby they can either draw down in green format, either in a bond or a loan format. So it's very, very flexible from the issuer's perspective.
So good point about loans being part of it, and that applies in other jurisdictions like ASEAN and Australia as well. Of course, a key part of this is understanding where the proceeds are going. At the Climate Bonds Initiative, we've always talked about resilience being something that is critical to addressing climate change. A large chunk, about 20% of bonds in the global green bond market address resilience in some form or other. For example, water utility bonds, which are improving the resilience of their water systems, as Cape Town did a couple of years ago. That conception, that understanding of the detail there will be expanded quite quickly this year as we start understanding resilience in terms of rebuilding our economies in the right kind of way. So we'll see more of it. We've already seen, I think, about Ivy, I think it's 300 COVID bonds from China or thereabouts. So there's been a significant bunch of issuance around that. We want to look at what the quality of those bonds are in terms of the assets, but some interesting ones. There's already one from a wind energy company in Hubei province who is done a COVID bond on the basis they're providing energy to Wuhan in lockdown, which is, hey, it's a green bond, but it's also a COVID bond and it's sold well. So Ivy, I think disclosure is the key here as much as anything, so we can make these assessments, isn't it? How have we gone of disclosure in the Hong Kong and GBA market, just looking back again at last year?
Yes, I would like to echo with Sean of HSBC's comment on the growing momentum of green loans in Hong Kong. In fact, we saw quite a number of green loans that took place in Hong Kong last year, but due to insufficient disclosure of their user proceeds or even the amount of the size of the loans, and then we are actually not able to include those loans into our green bond database. So going forward, if there are improvement in the disclosure of those green loans, I'm sure the number of the green bond figures will grow up significantly. Hopefully in 2020, we can see that trend. And in terms of quality of disclosure, we actually call some best practice example from the MTR. We saw that the MTR Corporation, they publish annually a standalone green bond report with the details on green bond allocation and project update, as well as environmental impact in GHG emission unit, and also the other matrix related to environmental impact. And their methodology is attached to the appendix of the report. So I think this is quite a very good example for other issuers to follow. Due to the limited space, we are not able to call the other best practice examples, but actually we saw some really best-in-class reports in Hong Kong from other non-financial corporates such as Swire Properties, New World Development. They also publish very nice green bond report. For those smaller issuers, I think there are still a lot of room for improvement in that disclosure. And I hope that the best practice shared by those larger players in the market could lead to improvement of the disclosure very soon.
Yeah, I think Kenneth, Ivy suggested an agenda item for the cross-agency committee there to think about. But that's a very good point. The more we can see, the more we can include, the more we can track, and reporting back to our community and to our regulators about how this is going, I think is part of this that engagement. And this is something that regulators around the world are wrestling with. So Tracy, I want to ask you about reflections a little bit more, and I also want to ask you about opportunities.
Before I go to talk about the opportunity, I want to do a plug from what we discussed about the COVID bond. So next Thursday at 4 p.m., we will be hosting a webinar on sustainable capital market under COVID. So we will be really dive into the capital market, talking about the COVID bond, and look out for invites for all our listeners and HKGFA member. So yes, here we go. So thank you for CBI for hosting this webinar, and honor to be sharing 8 key green finance project initiative in the Greater Bay Area. Normally, I would be happy to talk about this project whole day long, but especially on the green building project I'm leading. But under the strict instruction from Sean, I only have about 1 minute each on each project. So apologize if I rush through them, but please feel free to reach out to me or ask questions during Q&A time. So here we go. The first 5 key projects I want to mention is under the umbrella of the GBA Green Finance Alliance. The GBA Green Finance Alliance is a collaboration between the Hong Kong Green Finance Association, the Guangdong Green Finance Committee, Shenzhen Green Finance Committee, and the Macau Bank of Association. The platform is to host research and incubate green investment for the Greater Bay Area. The first project, as we mentioned so far in this webinar, on the green building project. So as Ivy mentioned, over 60% of the green bond proceed in 2019 attribute to the green building sector. And the green building sector presents the biggest green finance opportunity in the region. The purpose of this project is to leverage green finance solution to scale up the building industry and to decarbonize the GBA at the same time. This green building project is also under the Hong Kong 2050 is Now platform. The next project, Carbon Connect. Similar idea to the Bond Connect, Stock Connect that you know. Looking at Hong Kong's role in carbon pricing, carbon trading, and also how do we connect to the carbon exchange in Guangdong and Shenzhen. The third project on blockchain solar. So this is to leverage blockchain technology to fund smaller scale solar projects and eventually to refinancing the solar assets into digital asset-backed security. The four projects on greening the supply chain. This is leading by the Guangzhou Green Finance Committee. The idea is to create a green supply chain financial services guide program to help financial institutions to green the supply chain using the auto industry as a pilot. The fifth project is on solid waste management, is developed by the Shenzhen Green Finance Committee. The idea is to create an online trading platform to finance, to match company with service supplier to handle toxic waste in the GBA area. Now, moving on to sharing with you a couple of ideas from our Hong Kong Green Finance Association Green Bond Working Group. One is to look at to create a green bond exchange to host all listed green bond issuance in Hong Kong, including through the Bond Connect, similar to the one that Luxembourg Green Exchange.
Great idea. Quick.
Yes. So we are about to pitch this with the Hong Kong Exchange. So so watch this space. It will be great for increase, the transparency to help investor to come into the green bond market for this region. Yes, and then the next one is looking at the climate transition finance. So what's Hong Kong, China, GBA's role in transition finance, and whether it's divergent or convergence with the EU taxonomy, which I know, Sean, is your favorite topic, and the implications on green financing in Asia. Now,
this is a really important riff, Tracy, isn't it? Because, it's easy to look at the green stuff, solar, but we also have to look at steel and aluminium and supply chains and how all those sectors change. That's got to be transitions, right? And of course, the Greater Bay Area, which is the sort of manufacturing heart of the world, unless we tackle this, we don't make progress, right? This is really critical.
Absolutely. Even from, from the building industry, so far we see that proceed going to use in new build, but we really need to look at the upfront carbon and also the, at the later stage when we knock down the buildings, right? So the whole end-to-end life cycle is very, very important.
Mm-hmm.
Yeah.
Okay, so you're doing quite a lot. Sorry, Tracy, keep going.
So two more, so allow me.
Okay.
Yes, one more. Okay, so just to call out the last one on the initiative. So the Construction Industry Council, which is a statutory body in Hong Kong, they're launching a sustainable construction certification scheme. Again, this is to help construction industry and the supply chain to transition to a greener economy. 10 pilot projects to be rolled out with this scheme. So very exciting. So here we are, the 8 projects that I mentioned, and like I said, I probably rushed it a little bit on this, but feel free to come to me and reach out to me if you want to get involved or follow-up questions after the webinar. Now over back to you, Sean.
And it is important to note that the Green Finance Association, which represents all the major institutions working in this area in Hong Kong, including HSBC, is doing a lot of developmental work on this topic. If you don't know about it, do a search online, they're all there. Thank you, Tracy. Kenneth, I want to come back to you now. Is that we've got a whole bunch of ideas floating around about how to keep this market going. We've got a couple of questions, for example. One question I'm seeing is, can we see insurance-linked securities coming to Hong Kong being classified as green bonds? What are you being told and what are you seeing as the future develop at the moment, just in terms of your priorities and your thoughts for us?
Well, thanks, Sean. I think that kind of illustrates a bigger point, which is so far, and including in the webinar today, we're focusing on green bond. But as we all know, bond is just a part of the bigger market. Mm-hmm. And the kind of instrument that you just mentioned, as well as loan and all those, they are very important to the overall market development. We saw last year the SFC issuing guidelines on green investment funds, and the stock exchange issuing further guidelines on ESG on listed company. All these, I think, form part of the bigger ecosystem. Part of what we are hoping to do in the cross-agency group is to kind of set the foundation for the development of all these new products. One thing, as you and Tracy both alluded to, is the taxonomy. I think that kind of formed the building block of many of the things that we're trying to do, be it investment products or even green banking. So all these, I mean, we're kind of open-minded as to what exactly the products are. And I guess from the regulator's perspective, what we're really trying to do is have the kind of building blocks that are there, to have the kind of disclosure principles that are there so that people can innovate on that basis.
Great, and that is clearly the regulator role, but, and I have to say your government issuance is also part of that process of providing liquidity and benchmark pricing. Sean, I want to ask you a question to surprise you. You don't know about it. I had a conversation last night with AB Global in New York, who were telling me that in their green bond portfolio, they've seen in the last 2 months, liquidity is still there. Other bonds are frozen. They can't offload them, but they have been able to continue to trade green bonds. And they're seeing this as a powerful driver for the increased value of green bonds. Is this something you've heard too and come across in the Hong Kong market?
Yes, and actually HSBC has actually published some research on this exact topic. So what we've looked, HSBC research, we've looked at how green bonds have performed specifically during this recent crisis from a secondary market perspective, both in terms of spread and liquidity, and they've actually performed slightly better than conventional bonds. So basically, clearly that's encouraging. I think another interesting point is, while issuance has decreased, as we mentioned earlier, because of obviously the kind of the crisis around COVID itself and the focus on other things, at least in the short term, money coming in on the investor side has actually increased. So if you look at Lipper Fund data around the investment side in green funds, it's actually increased by, I think it's like 8% during this period. So we have issuance down by 9%, not materially, so still up on 2018 levels. But the funds coming into green bond funds have actually still increased. So I think that's obviously very encouraging. And so if you're a portfolio manager sitting on green bonds, I think you're actually probably feeling happier than other holders of fixed income securities at this time. So yeah, it's the perennial question that always has been from an investor perspective is how do these bonds, do they perform differently during a stress situation? And yeah, as I say, we've got HSBC and I'm sure other banks have actually released specific research on this, so that the fact that green bonds have performed better is definitely very encouraging.
So this is a pressure cooker, right? I mean, demand is rising, supply is down. I mean, whoa.
Yeah. I think we're in a very unusual situation at the moment where bond issuance globally actually has risen massively if you look at the data. So it's up almost 70% in the US. Europe is up around 20-25%. Asia's actually down a little issuance because obviously corporates here are less dependent on the bond market. In Europe and the US, the bond market is much more obviously developed than the bank market, so they're less reliant on bank lending. So we've seen a lot more issuance, but yeah, not as much of it in green bond format. Some of it in COVID alleviation and social bond format. So if you look at social bonds, have actually increased, I think it's by about 50% in the first 4 months of the year, whereas green bond issuance has fallen slightly. But Sean, you're right, actually, the technicals of that are such that for issuers, and we know some of the European sovereigns have announced their plans to do green bonds in the first half of 2020. Obviously, those have been put a little bit on hold because of everything else they're having to deal with. But when issuers come to issue and investors come to invest, clearly the lack of supply is actually a positive in the bond world. We often talk about it that way, that when you have less supply, that's technically in your favor, both as an issuer, but also even as an investor. So labeling, and specifying a new funding as a green bond or ICMA compliant green bond will clearly be a positive. So when we see that supply resume later this year, then yeah, we'd expect to, as I mentioned earlier, probably the deals to go very well, better than a non-green bond, and also the issuance to accelerate going forward.
Now, folks, if you're a potential issuer online, these are very important words you just heard from Sean. And note that the European market was totally dead in March, but at the beginning of April, we saw a bunch of green bonds come out, and one of them, by Iberdrola, was 11.5 times oversubscribed. They got the lowest bond rate they've ever seen. This is in EUR, of course. But we saw a couple of others, similar time, 5 times oversubscribed. So there's clearly a lot of demand there building up. Now, the question is, can we knit all this together with resilience and covered bonds into a grander theme? I guess, Kenneth, this is an issue around taxonomies, isn't it? You mentioned taxonomy a minute ago. One of the questions that we've been asked is, will there be further elaboration of taxonomy in the Hong Kong scheme, or are you going to just reference the Chinese and European? Where's your thinking going on taxonomy for Hong Kong?
Well, to be honest, we're still at a very early stage of thinking about this. I mean, we know, of course, we all know about the European and the mainland Chinese work on in this very important area, and the fact that they're reconciling the two standards is, I think, an important way forward. We also know that there are certain differences between the two. Hong Kong has always been the kind of channel connecting the rest of the world and China. And obviously, we need to take into account what is going on in the world. We don't want to reinvent the wheel, but at the same time, we also want to be kind of cognizant of the different thinking. So, I mean, it's a long way of telling you that right now, we don't have a good answer for that. And that would be our priority for the coming year in the cross-agency group.
I can tell you that there's an agreement in principle between the PBOC and the European Commission's DG FISMA to negotiate harmonisation of the two taxonomies. And we're simply waiting for travel to open again before that process starts. Of course, that may take us a few months, but that will be a feature of the coming year. And I think that'll be highly relevant to the Hong Kong market, which of course stands the bridge between China and international markets going forward. So Tracy, in terms of your membership, do you see the biggest opportunities in linking between international markets, the greater Chinese market, or do you think that the plans in the Greater Bay Area is where we should focus, or what can you tell our listeners about what's going to happen over the coming year?
Yes, so I also want to add a point on the taxonomy about the technical task force formed between China and the EU, right? I think this is a really key development where, you know, where the direction should be going. And I think that Hong Kong can be greatly benefit from it, you know, so we just need the COVID to go away where the two groups can really get together to work on this. And I'm really very much looking forward to that. In terms of memberships and the key development, I think it's both. So Hong Kong is the bridge between China and the international. So, and with our focus this year, as I mentioned, you know, the GBA is one of our key focus with all the 5 projects ongoing, and the GBA Green Finance Alliance is to be launched in the second half of the year. So watch this space. But earlier on this year in January, we already did a pre-launch meeting with all the key players and policymakers together in Shenzhen, and it went really well. So 12 months focus, GBA is definitely one of our key focus. And of course, in additional to this, our established 7 working group, 2 working group is looking at Hong Kong mainland's collaborations and the Belt and Road initiative. So yes, I will say in all 4s, we want to position ourselves to be the bridge between the international, GBA, China.
Great. For those people who are not aware of what a taxonomy is, it's essentially clear and detailed guidance about the kinds of investments that qualify as green or sustainable in the market. And China has pioneered this by having a green projects catalogue, which has been part of the PBOC, central bank regulations, tough regulations on green bond market. And Europe has now introduced a similar provision called the EU Taxonomy and Sustainable Finance. So a lot more coming out of that. We've had a question about whether the impact of the virus in China is pushing international funds away from China or the reverse. Now, Ivy, you actually ran a webinar just recently on this topic. And what was the upshot in terms of what's happening of international capital flows into or out of China at the moment? Is this positive? And of course, in relation to the green bond market.
Well, the speakers of the other webinar, they all pointed some opportunities brought about by the COVID-19 crisis. The COVID bonds is one of them. And also there is the issue of additionality. So before the crisis, some issuers, they couldn't even get funding from the traditional channels. But because of this crisis, a lot of them are, or the market players are actually revisiting their strategy on resilience and other related issues. So that gives chances to the issuers that couldn't have been tapped into the market otherwise before the crisis. And I just want to pick up a point on Sean of HSBC mentioned earlier on the investor appetite and the oversubscription phenomena. Actually, I want to point all the audiences to some green shoot in Greater Bay Area, because in late last year, we saw a number of deals coming out from GBA, which is themed as a GBA bond, and the use of proceeds are used for the projects such as renewable energy, low carbon transportation, and also construction in the GBA area. And some encouraging signs are that a number of deals that actually get some price benefits by issuing green bonds, because these green bonds were aligned with both Chinese and also international green bond standards. So that attracts a lot of investors, yes, that attract a lot of investors' interest into these bonds. And to our surprise, that one of the bonds by the Agricultural Development Bank of China, their 5-year offshore renminbi tranche actually got a 24 bips tightening compared to the guidance level. So can you believe it? That's quite a very substantial level of pricing benefit.
That's
I
amazing.
think, yes, and I think this actually provide a fertile ground for further issuance from the companies or all the entities in the Greater Bay Area going forward.
I mean, it is important to note that internationally, the experience is market gets going, investors get interested, start exploring the appetite, secondary market grows. And in the secondary market, we see price differentials beginning to appear with stronger demand and less trading, I guess. Sean might want to comment about that. But whatever, we see clear secondary market performance in EUR and US dollars, and that puts downward pressure on primary. One of the reasons posited by folks like Jason Mortimer at Nomura Research in Japan is that in downturns, green bonds perform better, which is what we've just been talking about at the beginning of this, Sean. Are you seeing this kind of development? And that's, of course, a great development that Ivy's just mentioned. What's the story on price from your perspective?
Yeah, maybe just to address the last question a little bit as well on China. So we've not seen any evidence of flows away from Chinese issuers generally. Obviously, we haven't seen many green bonds in Q1. When I look at the list of green bonds in Q1 that we've led, we've seen back in January, February, we obviously with the Bank of China Macau social bond, we did Beijing Capital Group earlier in the year for US dollar 300 million. But since, and that was in March, so that was since the COVID-19 crisis has been emerging. We at HSBC, we see the flows on the sales and trading side. We've not seen any significant impact or any impact in terms of demand for Chinese credits or anything specific to the COVID-19 crisis. So I don't think China's impacted any differently to anywhere else. More specifically, though, how bonds are going to have performed and are going to perform. Clearly, it's very easy for green bonds to get lost in the middle of the sell-off that we saw. We had a very violent sell-off in March when we saw probably the most difficult period, definitely since the financial crisis, like 12 years ago. Massive spread widening. A lot of it specific to a lot of the real estate companies that it issued, but even for the banks, you mentioned ABC, Agricultural Bank of China, but ICBC and others, Bank of China have done a lot of green bond issuance. We saw a lot of widening, Sean, in secondary of those deals, but it wasn't specific to, obviously anything specific to green bond. As a matter of fact, the green bond angle, as we mentioned earlier, definitely anchored things a little. So when we look at the HSBC research around this, then they performed a little better than the widening that you would ordinarily have expected. So the money, the investor wall of money that's going into green and sustainable finance is very much still there. And basically, everybody essentially was not investing for a period of 4 to 6 weeks during a very dislocated market. What we've seen since then is just a remarkable turnaround when we've seen globally very heavy issuance in Europe and the US, less so in Asia. So we've not yet seen the Chinese banks or the real estate developers, those who have issued a lot of green bonds in the past, come back to market yet. But as and when they do, yeah, I think some of it will be in green bond format because it makes absolute sense because as we mentioned earlier, secondary levels have come back. So we use in the bond world, we use the term retracement. So the credit spread widening that went out. So for an investment grade issuer, it was broadly 150 basis points. That has now come back about 70%. So we've seen a big retracement of the widening that we saw back in March. So that's why you're seeing a lot of issuers like in Hong Kong. We've led a few very large bond deals in the past few days, some more out of China today. And basically, we're seeing more and more issuers come back to market. As we see more of that supply, yes, you're definitely going to see more green bond supply because we've been starved, or investors with green bond specific funds have been starved of supply during the first 4 months of the year. You're on mute, Sean.
Sorry, Sean. On a macroeconomic perspective, if the Chinese economy is beginning to recover, subject to further COVID shocks, of course, the US economy is still very much in the midst of the crisis, as in Europe. You would expect investors to be saying there's going to be some gains in China and also in other East Asian countries, such as South Korea and Japan, in the short term. So one would assume the trend is going to be into East Asia rather than away from East Asia in the next 5 to 6 months. Is that a reasonable expectation?
That's a very good point. Yeah, so just even, investment banking wise, so we're all coming back to the office here I'm not giving away any state secrets, but we're all coming back to the office on Monday here in Hong Kong in debt capital markets. And I'm sure some of our competitors are doing the same. And I know a lot of the, government entities are already back or coming back next week in Hong Kong. when I talk to my London or New York colleagues about that, they just cannot believe it that we're considering doing that, you know, given social distancing, everything. But obviously things are a lot better here, as we saw some announcements from the government in the last few days. And what does that mean for the markets? Well, it means that we're likely to be able to, steal a bit of an advantage. So, you know, a lot of, you know, issuers and investors will be up and running here, whereas things are going to probably remain a bit more dislocated globally for at least another month or two. And so, we would expect to see, and we're already starting to see it, a lot more issuers issuing, you know, because because things have returned to something looking more like normality. And so there is, in the next few months, I would expect to see that China, you know, Hong Kong, the region, particularly this part, probably the northern part of Asia, that's likely to recover first, because unfortunately we went into it first as well back in late January, so we're recovering earlier, and so we'll likely benefit from that.
I'm of course at home in London, where I'll be in lockdown for at least another month, so good luck to you. We need to finish up, folks.
Yes.
Been a great webinar, thank you. Parting thoughts, any parting thoughts first? Kenneth, for our listeners, advice to them or parting thoughts?
Not much, except that please keep a close eye on what we're doing. I mean, we're hoping to really introduce some new measures in the coming year. So please stay tuned.
Tracy?
Sure. So I think one thing is very clear. There's huge green investment opportunity, massive demand. I have no doubt Hong Kong will play a key role in developing the transition financing in the Greater Bay Area. The opportunity is here. So now let's work together to ensure a green recovery. Thank you.
Do you want anything more, Sean?
I would just say these are unprecedented times, you know, through the crisis, but it's also an unprecedented opportunity to change things. So basically for issuers and investors alike, it's a really good opportunity in the next few years to see much more green bond issuance.
Ivy?
Coming from a market integrity point of view, I hope that the issuers in Hong Kong and in the wider Greater Bay Area can improve their disclosure so that more international investors can invest in those green bonds, and then we can include more green bonds in our database.
Thank you. You heard a lot of very interesting comments. I appreciate there are a lot of questions on the line. We will attempt to get back to you to answer as many of those questions as we can. Thank you everyone for participating. Thank you for our star-studded panel today. It's been really cool. This is an ongoing conversation. You can get hold of the webinar on the URL on your website at the moment, climatebonds.net webinars, podcasts will be available, and so on. The key takeaway today is we have an established market. We have extraordinary commitment, I'm going to say, by the Hong Kong MA and regulators to try and work to grow this market. And we have demand building like a pressure cooker. So if you're in the market to do something, whoa, if there isn't a better time to do it, I don't know what is at this particular moment. This is going to be part of the recovery story of Hong Kong, China, East Asia, and the planet. Thank you everyone for being interested in a sustainable future for our children. This is what we're doing with this market. Good luck in your further endeavors, and tune into our future webinars. Every single week we're doing webinars on this topic of climate bonds. Go to the webpage to see what else is coming through. Thanks everyone. Talk again in the near future, I hope.